Hello, my dear student. Once again, I welcome you all in the case study discussion. Before I start case study number 8, once again a small message to all of you. At this point of time, think big, trust yourself and make it happen. Believe me, at this point of time, you need to have a self-trust on yourself, a self-belief that you can do anything, whatever you want. You should be in a positive set of mind, and with that set of mind you can definitely going to become a CA. So what I just want to say that have faith on yourself, have belief in yourself, and you are the only person who can make yourself a chartered accountant. Let us start the discussion of case study number 8. Can we start? Yes sir. Universe Limited is engaged in the construction industry and prepares financial statement following International Financial Reporting Standard. Once again, read it as Ind AS and follow April to March as their financial year. During the year 2022 and to 2023, the company has faced some of the issues. For their solution, seek your professional advice. So they want your professional advice. On 1st April 2019, Universe Limited purchased a land property for rupees 4 crore. So they purchased the land property and immediately leased the property to Diamond Limited on an operating lease. So on an operating lease means for earning rental income. So can you see this land property will be classified as investment property and Ind AS 40 will be applicable. Annual rental were 30 lakh. On 31st March 2022, the fair value of property was 5 crore 40 lakh. Means at the end of the last year, the fair value was 5 crore 40 lakh. But as per Ind AS 40, we do not apply any revaluation model. It is only cost model which is applicable for investment property. So this information is not at all relevant. Under terms of the lease, Diamond Limited has an option to cancel the lease by giving 6-month notice in writing to Universe Limited. Diamond Limited gave the notice on 31st March 2002. So can I say at the end of last year, a notice was received and vacated a property on 30th September 2022. Means in the current year, they have used the property for 6 months and after 6 months, they have vacated the property. On 30th September 2022, means in current year after 6 months, the fair value of property is 5 crore 80 lakh. Once again, this information is not at all relevant because investment property is always measured by using cost model. Correct? Yes, sir. On 1st October 2022, Universe Limited immediately began to convert a property into 10 separate flats of equal size for sale in the ordinary course of business. So on 1st October, can I say investment property will be reclassified to inventory at its carrying amount, and carrying amount is equal to the cost price because land is not a depreciable asset. So no depreciation will be also charged. So carrying amount will be equal to 4 crore and the reclassification will be done at 4 crore. Understood? Yes, sir. Universe Limited has incurred a total cost of 1 crore 20 lakh in the conversion project during the period from 1st October 2022 to 31st March 2023. So can the cost of conversion will be added to the carrying amount of inventory? Correct. So 4 crore plus 1 crore 20 lakh, this will become the total cost price of inventory at year end. So 4 crore plus 1 crore 20 lakh, it will become 5 crore 20 lakh. As on 31st March 2023, the project was in progress and not yet complete. So can I say this will be considered as inventory, means WIP as on year end. The directors of Universe Limited estimate for the completion of project and they will be required to further incur a sum of 80 lakh on completion. So what is the cost to complete? The cost to complete, estimated cost to complete is 80 lakh and each plate can be sold at 1 crore. So what is the estimated selling price? 1 crore into 10 means 10 crore. So estimated selling price is 10 crore minus the minus is what? Estimated cost to complete, that is 80 lakh. So this will become 9 crore 20 lakh, 9 crore 20 lakh, this become NRV of WIP. What is the cost price? Cost price is equal to 4 crore plus 1 crore 20 lakh means 5 crore 20 lakh. So 5 crore 20 lakh is the cost price of the WIP. NRV is 9 crore 20 lakh, 9 crore 20 lakh. Yes sir. Understood? So whichever is lower. So lower is what? 5 crore 20 lakh. So that will be the carrying amount of inventory which will be carried in the balance sheet. Let's see what the question they have asked. Universe Limited has 450 employees which are the same as it was a year ago. Okay. The company has observed average staff attrition rate is 6% per annum, means on an annual basis 6% employee will leave the job. The company has been providing an annual bonus to all its employees for the last 10 years. Universe Limited has paid bonus to all those employees who have been in service during the whole of the financial year. Means any employee who actually leave the job will not be eligible for bonus, and any new employee who join the job will not be eligible for bonus. Means how many employee will be eligible for bonus for current year? That is 450 minus what 6%, that is 423 employee. So 423 employee will be eligible for bonus, correct? It is 450 minus 6%, 423. Bonus is paid in June following the financial year end. The bonus of 1,25,000 to each of the employee for 2021-22 was paid in June 2022. Means last year bonus how much was paid? It is paid at a rate of 1,25,000 per employee. There is a trend that Universe Limited increased the amount of bonus based on the official inflation rate, which is 8% for 2022-2023. Means for current year, bonus will be paid at an inflation of 8%. So we should increase the bonus by 8%. Although there is no legal obligation to increase the bonus by such inflation rate. So there is no legal obligation. But can I say there is a constructive obligation? So of course, Ind AS 19 is also applicable to constructive obligation. So there is a constructive obligation because as per official inflation rate it is given. So of course we should consider the inflation rate to calculate the to find out a provision for bonus. Yes sir, yes sir. So what will be the amount of bonus for the current year? It will be 423 employee into how much? 1,25,000, and that will be increased by 8% to 1.08. How much it is coming? 423 into 1,25,000 into 1.08. How much is coming? It's coming 57,105,000. This should be the answer. Let's see what they have asked. As per the HR policy of Universe Limited, the employer are entitled to 10 working days of paid sick leave for each year. So they are allowed 10 sick leave. Unused sick leave may be carried forward for one financial year. So of course this is short-term compensated absences. The employee are entitled to take sick leave first out of current year entitlement and then out of any balance brought forward from the previous year. Means on a LIFO basis. Means first the current year entitlement will be used and any balance can be used from what? The last year which has been carried forward. Okay. As per HR department, as on 31st March 2003, the average unused entitlement is 2 days per employee. The management, based on its past experience, expect that only 15% employee will use 1 day from the carry forward leave. So of course, can I say if it is unvested short-term compensated absences, means if the leave is allowed against leave, so we will create provision based on the proportionate cost of leave based on the probability of availment. I hope you have remembered this point. Salary per day is 2,000. Let's see what the question they have asked. Okay. Now coming to MCQs. The value of flat to be shown in the financial statement as on 31st March 2023. So as an inventory is WIP already we calculated. It will be what? How much we calculated? NRV is what? 9 crore 20 lakh and the cost price was how much? 5 crore 20 lakh, whichever is lower. So the answer will be 5 crore 20 lakh. Option number D is correct. Chalega? Yes sir. The carrying value of reclassified property on 30th September 2020. So reclassification will be done at carrying amount and carrying amount of the investment property was 4 crore. So reclassification will be done at carrying amount and the carrying amount was 4 crore. Means fair value information was not at all relevant. So answer is what? Option number A, 4 crore is the answer. I think this two was very easy. No explanation required. Correct. Now this you have understood now. We need to find out cost price NRV, whichever is lower. Got this? Yes sir. Then how much bonus should the Universe Limited recognize as liability for the employee benefit as on 31st March 2023? Already we calculated how much? 5 crore 71 lakh 5,000. The answer is what? 5 crore 71 lakh 5,000. This is the answer. Calculation done. Then compute the expense in respect of short-term compensated absences if they are assumed to be vested short-term compensated absence and non-vested short-term compensated absence. So vested means what? Payment will be done for each unused leave. So can I say how many employees are there? 450 employees. and each employee, what is the unused leave 2 and what is the salary per working day 2000. So this amount will pay. This amount will be is payable for short-term compensated absences if it is vested short-term compensated absence. So it is how much? 450 into 2 into 2000. How much? The answer is 18 lakh. So of course 18 lakh. This option number B is only correct. Means even though you don't do calculation for non-vested short-term compensated absences, then also your answer is B only. But let us check now for non-vested. It is 450 employee, but they said only 15% employee will use what? Will use the carry forward absences. So 15% will take, and out of 2, how much is the probability of availment? So what they are saying, out of 2, they will be able to use only 1 day. They will be able to use only 1 day. So 15% employee will use 1 day. And how much is the salary per working day? That is 2000. So how much is coming? 450 into 15% into 1 into 2000. How much it is coming? 1,35,000. 1,35,000. Answer is 1,35,000. This is the correct. Understood? If suppose the 2 option has been given 18 lakh, so of course second also you need to work out. I hope this was very simple. Coming to Ind AS 19, means point number 5. As per Ind AS 19, in case of employee benefit accumulating paid absences to be carried forward and allowing the same to be used in next financial year is classified as post-employment benefit wrong, termination benefit wrong, other long-term employment benefit wrong. Only the option number C is correct, that is short-term employment benefit is correct. All points done. Let's see what is the option given in the solution. So point number 1, option number D, we have done this only. Point number 2, option number A, 4 crore we have done. Point number 3, option number B, we calculated the same amount. Point number 4, option number B, 18 lakh and 1,35,000 we calculated the same amount. Point number 5, option number C, short-term employment benefit. Very easy. This was the simplest and case study. Correct? Got it? Done. Next time we'll meet with the next new case study, that is case study number 9. Till then, bye bye. Enjoy your study. All the best.